What is going on, investors? Hopefully you guys are doing well out there. That is right. It is the weekend, but more importantly, it's time for the FAANG Style Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, which are just a couple of weeks away from reporting those earnings. We'll give you those dates as we go through the technical chart patterns on most of these stocks, which are reversing like on the penny exactly where you would like to see them. It is going to be an exciting show. We better not waste any more time and kick things off like we always do with Meta Platforms. Started the week at 306, up over 3% to finish the week over $315 per share. The company is mulling charging EU users for an ad-free Instagram and Facebook. Now, this is in response to EU regulation that is threatening to restrict the ability to show users in that great country personalized advertising. So what does Meta do? They say we're going to charge you per month. If you sign up on a non-iOS or Google device, you will pay $10 to $50. If you sign up through one of those mobile phones, you're going to have to pay an extra tax since Google and Apple will absorb that. So you're paying $13 a month. We'll see what happens here. I actually think you're approaching that kind of the Netflix model, if you will, as it relates to social media. And maybe the Hulu model is better, where you have a completely ad-free model, but then you have ways to maybe reduce the ads or eliminate the ads by paying. And I think it's actually, this is great for social media. They've relied obviously for so long just straight on advertising. This is actually a way to kind of smooth out your revenue, since the ad business can be up or down. Now, Meta is saying to lay off Reality Labs silicon unit tomorrow, to the dismay of many people in the comments section that says I've been way too hard on Meta Platforms Reality Labs division, which bleeds through lots and lots of money. We'll certainly get a view of that when the company reports their earnings in a few weeks. Now, I actually think this is probably bullish for other silicon makers out there, more specifically, probably the ones that have custom silicon designs, maybe like an AMD with their Xilinx acquisition. You also have Broadcom and others. One of the reasons why the company is laying off people in the business unit is the Meta Quest 3 demand continues to weaken, and it could result in higher losses at the company. According to analysts, demand for the device has declined significantly, largely because you have to strap this thing on your face and have these joysticks. And while it might be cool for a little bit, definitely something that you're not going to do on a daily basis. Moving on to Apple, started the week at 173, up to over 2.5%. Finished the week at 177.50. Apple discussed using search engine DuckDuckGo to replace Google at one time on the Safari search. The interesting thing about DuckDuckGo is it is essentially just a skin for a Bing/Microsoft search engine. Now, it's not like you can't use DuckDuckGo or even set DuckDuckGo as your default browser on Safari. You just simply have to go into the settings and do this, but Google pays a hefty fee to Apple in order to be that default search engine, and I think that's a great business for Apple. Now, Formula One is gaining on a report that Apple TV may make a multi-billion-dollar offer for the global rights. Now, Apple has made a move into this area already. They essentially bought the season ticket, if you will, for the MLS. And obviously the timing on that was great, as Messi came over to a club, I believe, in Miami, and ratings for what we've been hearing are absolutely fantastic. Apple is maybe going to offer up to $2 billion per year, which is double what Formula One is currently being paid by ESPN at the current time. This is why Disney stock is under so much pressure. That company should have sold ESPN a year ago, 2 years ago. In fact, I suggested it in a research article not too long ago that they got to get rid of it, because $2 billion to Disney is actually quite a bit of money. $2 billion to Apple is like, it's a rounding error on like the other assets, not even their cash assets, like other assets that they have on their balance sheet. Apple, Microsoft to a lesser degree, but certainly Google and Amazon are going to be gobbling up the vast majority of the sports rights, since they have plenty of cash. Now, Apple CEO Tim Cook sells some stock this week, sold about $41 million worth of stock These are all planned in advance. And look, $41 million. Okay, it's a lot of money. That's probably more money than most people are going to make in their lifetime, let alone certainly over the next year or so. Keep in mind, these executives, man, they've got these lifestyles. Tim Cook probably a little less so, but man, property taxes on a multi-million-dollar house out here in California, not going to be cheap. Just getting around the state, not going to get cheap. He still owns 3.28 million shares of the company. And again, a planned sale before the holidays, as you're doing kind of tax planning into next year, not really something to be overly concerned about. Now, Apple's partner in manufacturing called Foxconn says September revenue was not good, but they see a strong holiday sales ahead. Sales slumped in the most recent quarter by about 20% as many consumers were waiting for that iPhone, but you did see a month-over-month increase of 60% at the manufacturer for Apple. Moving on to Amazon, start of the week at 128, basically flat on the week as the company is alleged to use an algorithm to boost prices. This is according to the Wall Street Journal, and the FTC suit that was brought forth last week against Amazon essentially alleges the company is controlling prices by boosting them on their site and then essentially making maybe like a Best Buy or a Target or a Walmart. They're going to boost them as well. I've got news for the Wall Street Journal. I've got news for the FTC. This is probably not news to a lot of you watching. Amazon has been doing this a while. If you're a seller on Amazon, you can actually download apps that allow you to do this. Basically control the price up or down. That's probably what Amazon is going to argue, is this is a tool that allows you to adjust prices both up or down. The FTC is going to allege that they're using this to drive up prices, but again, that's going to be counteracted by the fact that Amazon uses this same tool to actually lower prices as well. Now, Amazon said to be shutting down a live streaming app, not a video streaming app. This was something called AMP. It was launched just last year in March, and I'm not surprised it's getting shut down since it offered a user a way to play disc jockey with their own live radio shows, tapping a huge licensed song library. That doesn't sound like something that people are doing a lot of these days. Amazon also letting go employees in their communication division across many sectors of the company. Amazon, it's not, you have to be comfortable if you're going to be an investor in Amazon. The company tries things, but they have an internal motto at Amazon. It's called fail fast. And so they're looking to fail, and they're looking to do it very quickly and then cut the employees or cut the business unit the minute they realize that it is not working. But Amazon's web services, AWS, was also set up in that fashion as something that they were thinking was going to fail fast, and now it's, multi-$100 billion web service business. Now, Amazon is lowering the free delivery threshold on its groceries. Another example how the company raised the threshold for the free shipping on the groceries to $150 in February. After viewing the data, they're adjusting back down to $100. Now, moving on to Netflix for the week at $379, up just fractionally. Finished the week at $381 and some change. Now, Netflix is looking for potentially a price hike to counteract those actor strikes that most recently ended. Or excuse me, those are the writers that were striking in that strike. I believe they've come to agreement there and they're back to work essentially. But I think you still have an ongoing actors strike. And once that is expected to end at some point, well, Netflix will probably raise prices. Moving on to NVIDIA, start of the week at $446, up 2.5%. Finished the week at $457 and change. I get a lot of requests like add AMD, add TSM to the NVIDIA section. What I try to do is make the NVIDIA section obviously about NVIDIA. NVIDIA does something, we're going to talk about it, but this is also kind of the semiconductor portion of the show. So when AMD does something very notably, TSM, these companies, we're going to talk about it. So just expect this is kind of like the semiconductor section of the FAANG Stock Recap Show. Now, this is very interesting. OpenAI mulling making their own chips. Now, making, we'll have to put that in air quote. They're looking to design their own chips. They're not looking to become the next Taiwan semiconductor manufacturer. They're looking to maybe become the next AMD, NVIDIA, or similar type company that actually designs the chips and then gets a manufacturer like TSM to actually make the chips. Apparently, the company is performing some due diligence on a potential acquisition target. My guess is you have two companies, Cerebras, and that they make like a big giant chip, and it's like a server in a box. Really cool company, honestly. I would expect them to, if they don't get bought out, they would eventually go public. And then you have TensTorrent, which is run by a guy that used to work for AMD and I believe Apple and maybe even Intel at some point. My guess is that's who's OpenAI is poking around, because those are the companies that are more or less at a forefront of those types of. There's some other companies out there that they could be poking around. My guess, though, is OpenAI, without an acquisition, OpenAI is going to run into the. We just saw. I mean, we did a story on Meta, how they're closing their silicon. Okay, Meta has more money and more resources than OpenAI does, even with Microsoft backing them. They're going to find chip design is not easy. Okay, what AMD, NVIDIA, Broadcom, Qualcomm, these companies do is not easy. Not breaking any news there. But we're going to be following this. This is going to be very interesting to see what they decide to do, especially if there's an acquisition there. Taiwan Semiconductor's September revenue fell 13% year over year, but the Q3 sales dipped less than expected, largely because you do have a lot of AI demand offsetting probably some weakness that we saw over in Foxconn as the iPhone is kind of rolling over to a new device. Most consumers know that, and they slow their spending until the new device comes. Now, AMD's data center revenue outlook was dropped by analyst Baird. This is primarily your traditional, we'll put that in quotes, traditional data center revenue that AMD has been, gobbling up some market share that was largely owned by Intel. AMD has done a very nice job there, getting their way into Amazon and Meta and other data centers out there. That data center spend certainly has moderated a little bit. And what companies have done, if you're at Amazon or Google or Microsoft or any one of these big cloud providers, instead of spending a lot of money on traditional data center, you're kind of transferring that money over into AI. But what I think is going to happen in probably next year, maybe you want to push it all the way out into maybe like 2025, you'll have to come back and reinvest into your what we'll call traditional cloud data center. You're going to have to come back and reinvest in that. And so that's eventually a tailwind for a company like AMD and probably Intel as well. NVIDIA said to be pushing further into its cloud service space. This is where the company essentially turns themselves. They call it the DGX Cloud. They're essentially the AWS. It's a great business for NVIDIA. They have to tap dance a little bit because they still want people to buy these chips kind of first party. But at the same time, they're going to be leasing this space out themselves. And as margins, I don't think they're going to come under pressure anytime soon. But eventually, I mean, the semiconductor industry is very cyclical, and there's a lot of ups and downs on there. And so eventually you'll have kind of a slowdown as it relates to investment into AI servers. It's something that could last several years before you actually see this, but eventually you will. So it'd be nice if NVIDIA had some recurring revenue from that business. The Biden administration, President Biden, said to give China a heads up on chip export curb. Boy, man, he's playing hardball with China, isn't he? There's already these export rules that you can more or less drive a truck through as it relates to loopholes. So in China, you can't buy the fastest and latest and greatest NVIDIA chip, but you can go to AWS or Microsoft or even the DGX Cloud and spin that up if you want to. You don't have to purchase this. You can also purchase hundreds and thousands of the, quote, dumbed down or modified versions of the chips. And now the president administration is going to give China an even greater heads up. He's basically saying, hey, I'm going to punish. This is like a dad telling his son, I know you're going to eat that cookie right there. And after you're done with it, I'm going to put you in timeout for 5 minutes. That's basically what Joe Biden is doing here. He's saying, I'm going to not make it so you can buy those chips, or I'm not going to make it so you can spin that server up on Amazon Web Services. So you better do it now. Because in a month or two, I'm going to make it just a little bit harder for you to do that. This is great news for NVIDIA, AMD, and anybody selling into China. Moving on to Google. Start of the week at 132, up over 3.5%. Finished the week over $137 per share. Microsoft's CEO testified The obvious, that Google will expand its search dominance with AI. Well, guess what? Guess what Microsoft is going to do with AI? They're going to expand their enterprise software dominance. So no surprise, Microsoft is going to expand their dominance in their core competency based on AI, and so will Google. So will just about any company that is investing here. Look at what NVIDIA is doing. They're expanding their dominance in GPUs because of AI. And it's no surprise, folks. Now, Google backed Anthropic to raise $2 billion in its latest funding round. Some of the funding is coming from Amazon as well, as that company pledged to invest over $1.25 billion. Anthropic is hoping to reach a valuation in this round from $20 to $30 billion. Its flagship model is called Claude 2. It's very similar, or has similar capabilities as OpenAI's ChatGPT. Google launched the Pixel 8 phones at $699 and $999 respectively, and a second version of the Pixel Watch. Also out, you got some headphones as well, essentially just copying the Apple playbook. But I tell you what, if I wasn't on the Apple ecosystem, I think this would be the phone you go with. It really seems like a good product. Google also adding generative AI to its voice assistant. I think if Apple is smart, and if Apple just wants to make a bunch of money from AI, I actually think they should just like they have Google as the default search engine, they should just turn their AI like Siri over to Google and charge Google tens of billions of dollars a year, or maybe like $5 billion a year or something, to make it the default option on the iPhone. And then maybe you can switch to Siri or anybody else out there. We'll see if that develops. Now, Google's new Pixel AI features could prompt Apple to boost its AI development. I don't think so, guys. Like, I don't think so. Like, how long has Apple had, and how much resources does Apple have to boost their AI development? And they don't. Siri is about as good today as it was, 10 years ago when it launched? I realize we're just moving out of a lot of beta in air quotes. Like Google, a lot of their AI stuff is just now rolling out. Microsoft, with the partnership of OpenAI, still rolling stuff out to the mainstream. I understand Apple is going to be a step behind them, but there's a company that could have had something by now, could have released at least some smaller features. We're not seeing it. I think the route that Apple, honestly, and this is a guess, but I think the route they're likely to go is partnering with one of these companies and letting them be the default as it relates to AI and just charging them for it. Seems like that would be a great business. Now, India is demanding YouTube and other social media sites like Twitter, now known as X, and Telegram, to guarantee no child abuse content on the platform. I couldn't agree more with what India is doing here. I applaud them. I hope they're able to do this, because if India is able to have a hard line on this, hopefully it cleans up some of that content across these platforms. And shame on sites that you are watching here like YouTube for not already being able to guarantee this in stone. They have the resources to do it, and they need to. Moving on to Microsoft, start of the week at $318, up 2.8%, finished the week at $327 per share. Activision Blizzard, that company that Microsoft's been trying to buy for like 2 years now, it ticked higher amid a report that the UK decision, I thought we already got a decision from the UK, right? On the Microsoft may come next week. The company is eyeing closing that Activision deal next Friday. I think whether the UK comes along or not, they're just going to close this deal. I don't remember the acquisition price with Activision, but I think 94 is pretty darn close to what they agreed on. And Microsoft is going to own Activision. Now, Microsoft's Army goggles, this is real life. This isn't Call of Duty. They're making these Army goggles, and they got a recent makeover, and the reaction to that is positive. This is a $22 billion Army contract over 10 years, where Microsoft is trying to develop 121,000 devices. Now, while $22 billion is a lot of money, over 10 years to a company worth well north of $2.4 trillion actually isn't quite that much money. But what we are going to see here, and what's exciting for Microsoft in this, is not the revenue, not the profit that they're going to make. My guess is you're actually probably not going to even make a profit on the $22 billion. It's what Microsoft makes from a consumer perspective from these. They're going to make these goggles for the Army, and then they're going to use that technology for some kind of consumer product. That'll be interesting. Moving on to Tesla, start of the week at 246, up over 5.5%. Finished the week at 260. Hello, technical trend. SEC seeks to force Elon Musk for some testimony over his Twitter stock acquisition. I mean, can we get the government out of the, like, who cares at this point? The dude bought Twitter. He way overpaid for it. If he did not buy Twitter, Twitter stock would probably be in the single digits right now. Like, when is the United States going to realize, like, regulation like this doesn't do anything? Sites like YouTube, sites like Twitter have harmful content as it relates to children. Oh, we won't do that. We'll let India handle that. But, oh, we'll investigate a 100 billionaire spending his money rather recklessly on a social media site. Like, come on. I don't know who the candidates are going to be in the next election. The ones that run on a deregulation, kick half of the people out of Washington are going to get my support. Tesla reports sequential drop in deliveries due to factory downtime. So you had some factory downtime, as particularly in China, as they are revamping some of the models that they are making. Now, the company also cut the Model 3 and Model Y prices in the United States after missing those Q3 delivery estimates. But again, over the past week, shares of Tesla skyrocketed. And part of that is the fact that the company reiterated their full year guidance as it relates to deliveries of those electric vehicles. And finally, the Cybertruck. Elon Musk very regularly overpromises and underdelivers. He said there was going to be a Cybertruck delivery event in Q3. The Q3 has come and gone, but you do see enough of these Cybertrucks kind of rolling out there. Looks like potentially you might have something in Q4. Those of us like myself that are on the waiting list for one, I think we're probably looking at 2025. Where you probably may get one. Moving over to the technical segment of the show, and this is why we like technical patterns, folks. Okay, you can pattern things in nature. You can pattern human behavior. You can pattern, like, everything has patterns, okay? Everything in nature, human behavior, it all follows a pattern. And that's why so many people that leave comments on my channel and says, I don't believe in technical analysis. It is a bunch of malarkey. Guys, all this is patterning human behavior. That is all this is. This is a pattern. This is not a crystal ball, Miss Cleo. Call my 800 number. Give me $20 to read your palm. But I mean, people might argue, palm readers might argue that there's some validity in that, and I'm not going to argue with them. Here we are, folks. We made a low back in October. Higher low, higher low. And what did we say on last week's show? We said, here you are, guys, right on the bottom of the range here. And it was decision day for the S&P 500. Was the pattern going to continue? And if the pattern's going to continue, you're going to bounce off this level and you're going to move higher. Now, whether or not you come up here and make a new higher high remains to be seen. But right now, if the pattern holds, that's exactly what's going to happen. You're going to make a new higher high. You're going to approach the all-time highs that you made back here in December 2021. This is the area where you're probably going to try to make profits. Okay, this is the area where a lot of the guys on YouTube and even CNBC, they're going to tell you to buy up here. They were telling you, oh, get scared down here. Now, what could have happened this week? Look, if you were short this market, you would have shorted it up here at the top of the range. You would have made your profits, probably started peeling off your short position, and you started covering. And so what we could have had is kind of a short covering bounce. Would have made a lot of sense. So we're not calling a bottom and reversal over the past couple of month trend, but technical pattern still absolutely in place as it relates to the S&P 500. Also, some people say, why do you cover the S&P 500 versus the NASDAQ? Well, first of all, I go through all the NASDAQ stocks after this. Second of all, if you look at the top 10 holdings in the S&P 500, It is Meta, Apple, Amazon, NVIDIA, Google, Microsoft, and Tesla. So the S&P 500 is FAANG, folks. I mean, bottom line. Now, moving on to Meta. Very interesting technical pattern here. So we were on this breakneck trend that cannot be sustainable. I don't care if you're selling electric cars or you're selling online advertising. That has to break. But what's nice about Meta is we've broken sideways now. We're not pushing higher, but we're also not pushing lower. Consolidating sideways is just fine. Now, I'm going to move myself out of the way so I can see when Meta reports their earnings. Folks, we are just 19 days away. On October 25th, we will get earnings from Meta. That is where you are going to get kind of a decision day. Also with the S&P 500, as we move into earnings, we're actually setting up at the bottom. That means low expectations heading into earnings. If earnings are like decent, they could be like below average. Well, you still could get a bounce here because the expectations are low. With Meta, slightly different story. You've rallied hard off some lows, but you've got some sick consolidation underneath the shares, consolidation over the shares. I think this stock breaks one way or another in about 19 days. Moving on to Apple. The micro trend is still lower highs, lower lows, but you're consolidating around previous all-time highs. The more like medium intermediate trend is like way higher, okay? Higher highs, higher lows. I've shrunk our consolidating box with Apple. I think you're going to want to pick it up before these lows that we made in June of 2022 and January of 2023. And again, this is for people that either don't own Apple or you want to add to a couple of shares. Like south, and I don't know if we're going to get this shot or not, but south of 155 is when I would be pretty aggressive as it relates to Apple. They're going to report their earnings on November 2nd. These dates are still tentative. We'll keep updating you on the weeks ahead. Now, moving on to Amazon, somewhat similar to Meta, where you're on this breakneck trend that really can't be sustained, ran into overhead resistance. Not a lot that could actually send Amazon shares like back much considerably lower. I guess it's obviously possible, but I think the more likely outcome is you consolidate in this range. You wait for Amazon to report their earnings 20 days from now on October 26th. Moving on to Netflix. Technically, I took the trend line off. Technically, we were on this trend. Low, higher, low, higher, low, higher, low, higher, low, break of trend. But you still have not confirmed that this uptrend is over, okay? You really need to put a low much lower than probably $300 per share for it to really be set in stone. That this was a topping pattern and now you're heading lower. Like many of these stocks, Netflix is sitting on top of an area of consolidation, very similar to like Meta. You're sitting on the top of an area of consolidation, but also above you have some consolidation as well. Netflix, same thing. You're sitting above consolidation and you have consolidation above you as well. A pullback into this zone probably should be bought. Now, here's one of the most beautiful technical patterns. Again, all this is patterning human behavior, buying and selling something. In this case, it happens to be NVIDIA. Higher lows, higher highs. We talked about this when the stock was at this level. We said it was decision day for NVIDIA. You were either going to break lower and close this gap right here, but that the higher probability thing is that just like in nature, the pattern continues and you were going to bounce off this level and move higher. Now, the question for NVIDIA is it needs to come up here and make a new higher high, meaning it needs to get to about 505 or so. NVIDIA reports their earnings last on November 21. So we've got some time to go for that. But you have AMD, Intel, TSM in between there. Tends to move NVIDIA just a little bit. Moving on to Google. Still looks like technically you have broken through a trend here, but it is, you're still making higher lows, higher highs. That's what it looks like it wants to do. Google looks like maybe one of the best charts out here other than maybe Tesla. Moving on to Microsoft, looks exactly like Apple. You just peaked over, made a new higher high off the all-time highs that you made back here, 2022, 2021. But in the shorter term, you're making high, lower high, lower high, but the shares are consolidating at all-time highs, which again is not necessarily bullish, but it's certainly not bearish either. further pullbacks in Microsoft should be bought since the company is about to layer on a $30 charge on its number one product that you pretty much have to buy. Finally, moving on to Tesla. Look at this. This is just so beautiful. Made a low back here in 2022, made a higher low, another higher low. Didn't really confirm it with a new higher high, but here you are bouncing off of this level. You'd like to see with Tesla push back up above 302, essentially retesting some highs that we made back here in August. It would confirm that this uptrend is still intact. Very similar to Google. While it's on the knife's edge, still a beautiful uptrend with these stocks. Nothing really to be overly concerned about with the S&P 500. I know Jerome Powell gets up, and I know these macro pundits come up and they try to give you this graph and another graph, and they say, well, it happened in 1972 in March at 3 p.m., so that means it's going to happen again here in 2023. Doesn't really work that way. In fact, it's far more simpler than that. You have patterns of human behavior for the past year, almost to the day. Buyers have been stepping in and buying these stocks at precise areas. If you cannot step in and buy stocks at these areas, then I think you need to evaluate yourself as an investor. Are you an investor with confidence, or are you an investor that gets scared? When stocks make these moves back down to the bottom of the channels, it is not easy to buy here. That is why you have to make the decision beforehand and trust the process and trust the pattern. I would continue to trust these patterns until they give you an indication to not. And right now, this week, we got confirmation that these patterns are still intact. We'll certainly keep an eye on it over the next couple of weeks as all these stocks approach their earnings date. We'll certainly be here to cover it here on the channel. Thank you for tuning in today. We'll be back again next Friday. Until then, have a safe weekend and good luck with your investments.